Hey everyone, and welcome back. If you're a Tesla investor, I bet your head is spinning right now. If your portfolio's up, congratulations, you're killing it. If it's down, hey, we've all been there. But either way, you've probably just seen something that makes absolutely no sense.
That's right. We're talking about a situation where record-breaking good news was met with a pretty significant stock drop. It's a real paradox.
Okay, so let's get right into it. This is the big question. Tesla just had its best quarter ever, delivering a record number of cars and blowing past all the expectations. So my first thought is, great, the stock's going to shoot to the moon. But it went down over 5%. What is going on?
It's the classic Wall Street puzzle. On the surface, the numbers look fantastic, but the market's reaction tells us that some big investors are seeing something else under the hood. So let's break down the two sides of this story, starting with all the good news, the bull case.
Perfect. Let's start with the positives. For anyone feeling bullish on Tesla, walk us through it. What are all the things that have them so excited right now? It seems like the company is just firing on all cylinders. Well, it all starts with this number, nearly 500,000. 497,099 to be exact. That's how many cars Tesla delivered in just the third quarter. This wasn't just a personal best for them. It completely smashed what Wall Street analysts were predicting. By any measure, this was a huge, huge win. Wow, okay, so how did they pull that off? Was it just one thing?
Not at all. It was really a perfect storm of positive factors. A big one was the expiring $7,500 EV tax credit here in the US, which definitely pushed a lot of people who were on the fence to buy now. But you also had Elon Musk personally buying another $1 billion of stock, which is a huge vote of confidence. Plus, sales in Europe bounced back strong, demand in China is still firing, and their energy division, the Megapacks, is really starting to boom.
So it sounds like the car business is doing great. But I keep hearing people say that if you're only looking at car sales, you're missing the bigger picture. Is that right?
That's exactly right, and it's the core of the bull argument. For the biggest Tesla supporters, the cars are just the beginning. As the analyst Dan Ives says, you have to think of Tesla as an AI innovator first and foremost, not just a car company.
And this is really the heart of it. The bulls see the cars as just the hardware, kind of like iPhones, for what's going to be an incredibly profitable software and AI business. They're betting on things like full self-driving and a future network of robotaxis. Some are even predicting that this tech could be in 30 to 35 cities within a year. And if that happens, it could add $1 trillion to the company's value. That's the massive future they're investing in. $1 trillion? Okay, that's a huge number. But that brings us right back to our paradox. If the future looks that bright, why on earth did the stock fall after such a great report? So let's flip the coin. What are the bears, the skeptics, seeing when they read between the lines? The number one concern for skeptics is a concept called pull-forward demand. Here's a simple way to think about it. Imagine your favorite store announces it's closing for good in 1 week and everything is 50% off. They'd have a massive surge in sales, right? But it's not because they suddenly got more popular. They just convinced all their future customers to buy everything right now. The market is worried that Tesla just did the exact same thing without expiring tax credit. And this slide shows the exact data point that has the bears so worried. Look at the numbers. Yes, deliveries were up, a new record, but look at production. They actually made fewer cars than they did in the same quarter last year.
Whoa, so they sold more cars than they made.
Exactly. They were clearing out their existing inventory. For a skeptic, that's a major red flag. It begs the question, what happens in the next quarter when that tax credit incentive is gone? Will demand fall off a cliff? Okay, so worries about future demand, that makes sense. What other risks are keeping investors up at night?
Well, that's just one piece of the puzzle. The bears also point to a sky-high valuation. A price-to-earnings ratio over 250 is just massive. For context, a company like GM is under 10. It means an incredible amount of future success is already baked into the stock price. On top of that, you have fierce competition from rivals like BYD who are catching up fast, and growing regulatory pressure over the safety of full self-driving. It's a whole collection of pretty serious risks.
So we have two completely opposite stories being told with the exact same set of facts. One side sees this incredible AI company on the verge of world domination. The other sees a temporary sales spike that's hiding some really big problems. I can only imagine the pros on Wall Street are just as confused as I am. They are completely divided, and this chart really shows it. These are the price targets from professional analysts, basically where they think the stock is headed. The bears see it falling down to around $250. But the bulls, they see it soaring past $600. You know, this isn't just a small disagreement. It's a fundamental debate about what kind of company Tesla actually is. This is exactly why it's so confusing for a beginner investor like me. So how can we make sense of all this? Can you boil it down into a simple framework that someone can use to think through this and make their own decision? Absolutely. In the end, this entire debate really comes down to which of these two descriptions you believe is more accurate. On one hand, you have the bull view. Tesla is an AI and robotics company that just happens to make cars right now. Its real value is in the future. On the other hand, you have the bear view. Tesla is an innovative but fundamentally overvalued car company that's about to face the same old problems every other car company faces: slowing demand and tough competition. Okay, that makes it much clearer. So if we want to figure out which story is winning, what are the concrete signals we should be watching for in the next few months?
There are 4 key things. First, the Q4 delivery numbers. We'll find out if that sales spike was a one-time thing. Second, real, tangible progress on full self-driving. Is the tech actually getting better in the real world? Third, competitor sales. Are companies like BYD and GM starting to steal market share? And finally, profit margins. With price cuts and new spending on ads, can Tesla stay as profitable as it has been?
So that's the bottom line, isn't it? Is Tesla building the future, or is it just building cars? Answering that is the key to figuring out if this stock is a huge bargain or a dangerous bubble. The story is definitely not over yet. Thanks so much for breaking that all down for us, and thanks to all of you for tuning in. Be sure to subscribe to RichTogether TV for more deep dives like this one. We'll see you next time.
Welcome to The Explainer. If you're a Tesla investor, you probably had a pretty rough Friday. Watching your portfolio take a hit like that is never fun. It left a lot of us wondering, what on earth just happened? It wasn't about the company, but about a trade war brewing halfway around the globe. We're here to break it down and figure out how to think about our next move.
Absolutely. What we saw was a classic clash between short-term fear and long-term vision.
Okay, so here's how we're going to tackle this. First, we'll unpack that Friday shock. Then, we'll look at all the good news, the bull case for why you might be optimistic. After that, we'll dive into the bear case and those geopolitical headwinds. And finally, we'll give you a framework to help you decide what to do next.
So, let's start with Friday. It really felt like it came out of nowhere, didn't it? One minute things are fine, the next, not so much.
It certainly did. And this number right here is what caused all the anxiety. Tesla stock dropped over 5% in a single day, closing at $413.49. That's a big move. That is the big question. Because, I went looking for bad news from Tesla itself, and I couldn't find anything. No bad earnings report, no major recalls, nothing. So what gives? You're right, this wasn't about the company at all. This was pure geopolitics, and it all escalated incredibly fast. It started on October 9th when China announced new export controls. By the next morning, the U.S. was threatening 100% retaliatory tariffs, and by that afternoon, the whole market was spooked. The Nasdaq dropped 3.6%, but Tesla, being so tied to China, got hit even harder.
Okay, so a big political storm hit the market. But, before all that drama, the news around Tesla was actually really positive. So I guess my question is, what are the key reasons people are still optimistic? What's the bull case here?
Well, the fundamental business is just really strong. Just before this trade news hit, Tesla announced they had delivered a record number of vehicles in the third quarter, almost 500,000 cars. That's a huge jump, not just from last year, but also from the previous quarter. The business itself is growing, and that's what long-term investors focus on. And it's not just the delivery numbers. They're also launching more affordable versions of the Model Y and 3, which opens up the market. We saw EV sales in China bounce back in September. Plus, you have potential catalysts on the horizon, like a big software update for full self-driving and a lot of buzz around the robotaxi project. And of course, the big one, the Q3 earnings call on October 22nd, which everyone will be watching.
Right.
This is exactly why some analysts are so bullish. They're looking right past this short-term political noise. And when they do that, they see some serious potential upside, anywhere from about 40% to nearly double the current price. They believe the company's strong fundamentals will win out in the long run. Okay, those numbers look fantastic, but they don't just erase that 5% drop on Friday. So we have to talk about the bear case. What exactly are these rare earth elements I keep hearing about, and why are they suddenly so critical for a car company? That is a great question. The easiest way to think about them is like a secret spice.
You only need a little bit, but without it, the recipe for an electric motor just doesn't work. These metals are absolutely critical for making the powerful, lightweight magnets that make modern EVs so efficient.
And this is where the problem lies. Who controls the spice rack? Well, for the most part, China does. They control the processing of about 70% of the global supply. This gives them immense leverage. In a trade war, they can threaten to cut off the supply of this critical ingredient.
So the risk for Tesla is suddenly very clear. You could have supply chain disruptions or rising costs that squeeze profits. Now, to be fair, Tesla has been working on this. They're developing new motors that don't need rare earths at all and trying to find other suppliers. But that kind of major change, well, it takes time.
And this risk is why the broader consensus among analysts is much more cautious. If you average out the forecasts from dozens of them, their 12-month price target is actually below the current stock price. They see a potential downside of 12 to 14%. The general feeling is hold. Basically, they're saying, be careful, there could be more turbulence ahead.
Okay, so this is where it gets really confusing for a beginner like me. On one hand, the company is breaking records. But on the other hand, it's stuck in this huge political mess that it has no control over. As an investor who's trying to decide whether to sell, hold, or maybe even buy more, how do you even begin to think about this? It's really helpful to just take a step back and think about this classic quote from Warren Buffett. What he means is that in moments just like this one, fear and impatience take over. Money tends to flow away from people who panic over scary headlines and towards people who can patiently focus on the long-term story of the business.
So instead of telling you what to do, here's a simple framework to help you think it through. First, acknowledge the noise. Separate the political drama from the company's actual performance. Second, know your timeline. Are you investing for the next year or the next 10 years? Your answer changes everything. Third, consider the consensus. The pros are cautious for a reason. And finally, watch that key event. That October 22nd earnings call is when we'll get our next big piece of real information directly from Tesla.
So what you're saying is, it really all boils down to your personal time horizon. The decision isn't just about Tesla, it's about whether you're focused on the day-to-day bumps or you're invested in a much longer-term vision. And there's no single right answer for everyone.
Exactly. This kind of external shock, a trade war, a pandemic, whatever it is, it's just a part of investing. It's going to happen. So the real question this whole situation forces you to ask isn't just about Tesla, it's about your own plan. Is your investment strategy built to handle a storm like this without you panicking?
That is such a powerful way to look at it. Thank you so much for breaking down this really complex situation. And that's all for this explainer.
Welcome, everyone. If you're a Tesla investor, I'm guessing you've felt some serious whiplash lately. The stock has been on an absolute roller coaster, and it leaves you wondering, is now the time to go all in, or should we be hitting the brakes? If you've been holding on and seen some gains, congratulations. But now comes the hard part, right? What's next?
That's the key question. And the answer really depends on whether you see Tesla as a car company facing headwinds or a futuristic AI company just getting started.
I mean, just look at this. Up over 36% in the last 90 days. That's a huge run. It can give you some serious FOMO if you're on the sidelines, or maybe even make you a little nervous if you're already in. So, what on earth is behind this surge? Let's start with the good news. Okay, so for everyone feeling bullish, the future looks bright. What are the powerful forces pushing the stock up right now? Can you break down all of the good news for us? Well, the excitement is definitely palpable. And it's not just retail investors. We're hearing it from big names, too. For example, Raoul Pal, a really well-respected macro investor, just called Tesla's chart one of the strongest out there. What he means is that the stock's price movement itself is showing incredible strength, and that tends to attract a lot of attention. And believe me, he is not the only one. And you can see why. It's been a constant stream of good news. You had major analysts at places like Evercore and Wedbush raising their price targets in a big way. Wedbush is particularly focused on that AI and robotaxi potential. Then, boom, the Q3 delivery numbers came in and they beat expectations, which shows demand is still incredibly strong. It's like every piece of news is just adding more fuel to the fire. But here's what's really crucial to understand for the bulls. This is not just about selling cars anymore. They see Tesla's growth happening in 3 distinct stages, like a rocket. Stage 1, that's what we all know, dominating the electric vehicle market. But stages 2 and 3, that's where the story gets really, really big. It's about Tesla becoming an AI juggernaut, with robotaxis and eventually a leader in robotics with the Optimus bot. Okay, so let's talk about that AI and robotaxi idea. We hear about full self-driving all the time. What's the latest update, and why is it such a big deal?
The big signal recently was the release of FST version 14.1. The fact that it includes a more aggressive driving style, nicknamed Mad Max mode, tells the market that Tesla is massively confident in the system. The ultimate goal here isn't just to help you drive, it's to create a completely unsupervised network of cars that can earn money for their owners.
And that leads to the real endgame here, the cybercab. This isn't just a new model. The bull case is that it will be built with a totally new manufacturing process that slashes costs. Think about it. The potential here is to completely upend the idea of owning a car. Kind of like how smartphones changed everything about the phone industry. Some analysts are predicting this network could even start rolling out as early as 2026. Right. And all of this futuristic talk isn't just getting long-term investors excited. It's also creating a buzz among the technical traders who just look at charts. A veteran analyst like Peter Brandt has pointed to classic patterns, like something called a cup and handle, which to him signals a potential breakout. He believes the charts are pointing towards a price target of $480. For traders, that's a powerful signal. So, with all that, what are the pros on Wall Street saying? Are they all in agreement?
Well, that's where it gets interesting. It's actually pretty split. You can see that just over half of the analysts who cover the stock are bullish, with a buy or a strong buy rating. But look at the other side. A huge chunk are telling investors to hold or even sell. That division tells you there's a very different side to the story.
Okay, that makes sense. Because this all sounds almost too good to be true. It can't all be sunshine and rockets, right? What's the catch? What are the big risks that have almost half of Wall Street saying, hold on a second? I think the biggest thing I keep hearing is, sure, they're selling more cars, but aren't they making less money on each one? Is that the main concern?
That is the perfect question. You've hit on the absolute core of the bear argument. It all boils down to one word: profitability.
And here's the conflict in a nutshell. On one hand, yes, deliveries are up 7% from last year. That's solid growth. But to get that growth, especially with all the new competition, they've had to cut prices. And those price cuts are putting serious pressure on how much profit they make on every single car they sell. This leads us to the most important term for the upcoming earnings report: gross margin. Let me make it simple. If Tesla sells a car for, say, $50,000 and it costs them $40,000 in parts and factory labor, their gross profit is $10,000. The gross margin is that profit as a percentage. It's the cleanest way to see how profitable the actual car-making part of the business is, and right now, investors are watching it like a hawk. And this chart shows exactly why they're so worried. This is the forecast for earnings per share, or EPS, which is basically the company's bottom line profit. A year ago, it was over $1 per share. The estimate for this quarter, just 74 cents. That is a huge drop, and it's a direct result of that margin pressure we just talked about. And it's not just the margin issue. There's a whole list of other headwinds. Competition is getting incredibly tough, especially in China from companies like XPeng and Li Auto. Here in the US, a big $7,500 tax credit is ending, which could slow things down. Then you just have the overall economy. High interest rates make car loans more expensive. And you can't ignore the background noise, like governance concerns and the constant risk of supply chain problems. It's a lot to navigate. Wow, okay. So we have this incredible futuristic bull case on one side and some very real, right here, right now risks on the other. How does an everyday investor even begin to process all of this to decide what to do next? You have to decide which Tesla you're investing in. The bulls are buying into a futuristic AI and robotics company with almost unimaginable growth potential. The bears, on the other hand, see an auto company, a fantastic one, but still an auto company that's facing margin pressure, tough competition, and has a stock price that's already very, very high for a car maker. Which story you believe is the one that matters. And in the very near term, it all comes down to one single event: the earnings report on October 22nd. That's the moment of truth. We'll get real data, not just forecasts. What the company reports, and just as important, what they say about the future, will likely set the direction for the stock for the next few months. So as you get ready for that report, here's a simple checklist. Number one, that all-important gross margin number. Does it come in above the 17 to 18% that Wall Street is expecting? 2, listen very carefully to management's tone. Do they sound confident or cautious? And finally, look for any real, concrete updates on those future growth stories, the Cybertruck and the robotaxi timeline. And that really leaves us with the million-dollar question, or in Tesla's case, the trillion-dollar question. With its massive valuation, how much of that incredible futuristic vision is already baked into today's stock price? Answering that one, well, that's your move. Thanks so much for breaking all that down for us. And for everyone listening, we hope this gives you a clearer picture. Make sure you subscribe to RichTogether TV for more deep dives like this. We'll see you next time. So let's talk about Tesla. If you've been watching the stock market at all, you've probably seen the headlines. They just had record-breaking sales. So why on earth did their stock drop? It's a paradox, and it's got Wall Street completely buzzing. Today, we're going to dive deep into the very mixed signals from Tesla's latest earnings report, and we're going to figure out what is really going on. I mean, this is the puzzle, right? This is what has everyone so confused. You've got record sales over here and a falling stock price over there. It just doesn't seem to add up. It's a real head-scratcher. So let's peel back the layers and see what's actually driving this pretty strange reaction from the market. And right here, this is where the whole story gets complicated. On the one hand, Tesla brought in a massive $28.1 billion in revenue. That's a huge beat, way more money coming in the door than anybody expected. But, and this is a big but, they missed on their profits, or what the analysts call earnings per share. This is the fundamental conflict that's creating all the debate and splitting investors into two camps. To really get this, we have to look at the two powerful stories that are fighting for control of Tesla's stock price. So first up, let's check out the bull case. This is the optimistic vision that has investors dreaming big and betting on a revolutionary future. The bulls, they point directly to this number, a record-breaking quarter for revenue. I mean, this isn't just a little bit of growth. It's proof of the incredible global demand that still surrounds the Tesla brand. It shows they can still pull in huge amounts of cash. And all that revenue was driven by this. Nearly 500,000 cars delivered in just 3 months. Now, part of that was a rush of people trying to grab an expiring tax credit, but for the bulls, this is hard proof that Tesla can still move a massive amount of product whenever it needs to. But here's where the bull case gets really interesting. It's not just about cars anymore. Look at this, an 80% surge in their energy division. This is such a critical piece of the puzzle because it shows the company's story is changing. The bulls see Tesla evolving into this diversified tech giant, not just a car company. And all that activity created this, a record cash pile of over $41 billion. Now, this is more than just a number on a spreadsheet. It's a war chest. It gives them the freedom to innovate, to fund those moonshot projects, and to build the future without having to rely on anybody else. This quote from an analyst really just sums up the whole bull perspective perfectly. They're basically saying, hey, don't get bogged down in today's profit numbers. The real story is what's coming next with AI. For them, this short-term dip is just a little bit of noise compared to the massive signal of what's on the horizon. And this is that future they're talking about. For the bulls, this roadmap is everything. We're not talking about some far-off sci-fi dream. We're talking robo-taxi services rolling out in major cities by the end of next year, a public demo of the Optimus robot right after that, and then getting ready to mass-produce a dedicated robo-taxi vehicle. The argument is simple. You're not investing in last quarter's profits. You're investing in this. Of course, for every investor who's dreaming about that future, there's another one who is slamming on the brakes, totally focused on the problems of today. So let's flip the coin and dig into the bear case. And this is the question the bears are asking. You know, if the future is so bright, why did the stock drop? Why are so many people worried? The answer, they say, is in the core business, the part about actually selling cars for a profit. This chart right here, this shows the single biggest fear for the market. It's the automotive gross margin, which is just a fancy way of saying how much profit Tesla makes on each car it sells. And it has plummeted from a high of 27% all the way down to 18%. And why? Well, it's because they've been cutting prices to keep those sales numbers up. So yeah, more cars are being sold, but for a lot less profit per car. And remember those record sales we talked about? Well, the bears have a very different take on that. They call it pull-forward demand. The idea is that the expiring tax credit didn't really create new buyers. It just convinced people who were already planning to buy a Tesla in the near future to do it right now. And the big fear? A potential sales cliff is coming. So the bear case really boils down to this. Profitability is shrinking. Competition from rivals like BYD is getting really intense. The sales boost from those tax credits is over. And frankly, the stock's high price looks pretty tough to justify based on the profits they're making right now. You put all that together, and it's kind of a perfect storm of concerns that is making investors really nervous. And this isn't just some fringe opinion. A lot of the big Wall Street analysts are advising caution with a pretty lukewarm hold rating. Some are even more pessimistic, warning about that potential sales cliff. This just goes to show how seriously these short-term problems are being taken. Okay, so we're left with two completely opposite stories. The bulls are looking 10 years down the road. The bears are focused on the next 10 months. The key to making any sense of this is to realize that you're basically looking at two different companies hidden inside of one stock. Let's just lay it out side by side. The bull case sees an AI and robotics company where the future vision is all that really matters. The bear case sees a car company where the present reality of falling profits is a huge problem. Both sides are looking at the exact same data, but they're coming to completely different conclusions based on what they choose to focus on. Now, this is not financial advice, but here's a framework to help you think through your own position on this. First, you have to define your time horizon. Are you in this for 1 year or for 10 years? Second, define what you believe. Do you have faith in that AI and robotics vision, or are you focused on today's car profits? And third, define your risk tolerance. The bull case requires a ton of patience through some wild swings for that potential long-term reward. Ultimately, it all boils down to this one simple question. What company do you believe you are actually investing in? Is it a car company that's struggling with profitability today? Or is it a robotics and AI company that's on the verge of changing the world tomorrow? Your answer to that question will probably determine whether you think Tesla stock is headed for new heights or if it's facing a very difficult road ahead.